This is a presentation on dividend policy. First of all, what is dividend? Dividend are money paid out of the profit made by the business. Before dividends can be paid, the board of directors will need to sit and take a decision on how much should be paid as dividend on the profit that has been made for that financial year. And before this decision can be reached, the financial manager is called on to advise the board of directors. It is this advice or recommendation of the finance manager that is approved, and the dividend paid out to the shareholders. However, before the finance manager can come up with his advice or recommendation to the board of directors, there are several pertinent questions that the finance manager needs to answer. The first is, what are the investors' preferences? Knowing and understanding the investors, the shareholders, is very pertinent. Understanding what their preference is, knowing what they want is very, very important. It's a very, very important question the finance manager needs to answer before coming up with the advice on whether or not dividends should be paid in a particular year. The second question that is important to be answered is, what are the financial needs of the company? The finance manager should be able to draft out, should be able to spell out the financial needs of the company, should be able to draw out what the financial needs of the company are, and if it requires that the money be reinvested back into the business to meet those needs. This question needs to be answered before the finance manager can make his advice, because the financial needs of the company should always come first, should always be a priority, because the more money the business makes, the more dividend shareholders will continue to enjoy for a long time. But if the shareholders are quick to want to earn dividend at the expense of the continuity of the business, then the company would run down in no time and get into bankruptcy. The third question is, what are the constraints of paying dividends? What are the limitations? Are there restrictions that needs to be taken note of? Are there issues? Are there issues that needs to be looked out? Are there constraints? All this question is very important. The access to the capital market, restrictions in loan agreement, legal restrictions, liquidity, financial conditions, borrowing capacity. Are all these constraints? Will all these be a constraint to pay dividend? Including the article of association, talking about the legal restriction. Legal restriction there refers to the article of association. All this needs to be assessed, all this needs to be looked out, all this needs to be analyzed and evaluated before the decision on the payment of dividend, advice for the payment of dividend, is made by the finance manager. Another question that is begging for an answer before the advice by the finance manager is, should the company follow a stable dividend policy? Should the company follow a stable dividend policy? And in other words, should the company decide to pay dividend consistently? Should the company adopt a consistent dividend paying policy where the the company pays dividend steadily, the finance manager on behalf of the firm should examine the economic and market condition as well as the strength before deciding whether to follow a stable dividend policy or not. And lastly, the last question is, what should be the form of dividend? What should be the form of dividend? What form should the dividend take? Should the dividend be paid in form of cash, or in form of bonus shares, or in form of share buybacks? What form should the dividend take? These 5 questions are questions that should be looked at, are questions that the finance manager needs to answer first, provide adequate and sufficient answer to before advising the board of directors on paying dividend on a particular financial year or not. Thank you.